most widely track Indian stocks, and by widely track we define it by at least 10 analysts covering the stock, and that brings us to a universe of 255 stocks, out of which 66 companies are trading below the lowest target price set by the consensus of analysts that are available on the Bloomberg terminal. So that makes it nearly 25% or more than 25% of the entire universe quoting at a price which is lower than the lowest target price that the analysts have on the counter. Now, in terms of the individual sectors, let's take a look at the sectoral snapshot and which are the companies which dominate this list. And right at the top is financials. Almost 15 out of these 66 stocks are made up of financials along with industrials too. So they both combined account for nearly 50% of the entire universe, along with notable names from the IT space, basic materials, which is basically your metals and mining names, consumer good companies, and healthcare are the other few sectors which have the most number of stocks that are trading significantly lower than even the lowest analyst target price. Now, in terms of individual stocks, and we'll try and take a look at the top 10 stocks which are quoting the lowest as compared to the lowest target price. So the difference between their current market price and the lowest target price is the highest, and right at the top of the list is HG Infra. It's almost down over 30% from the lowest target price. So it's currently quoting at around 209 rupees, and the lowest target price is about 300. And coincidentally, all 13 analysts tracking the stock have 100% buy rating on the stock, and most of these analysts have got their estimates completely off the mark on the counter, and that is mainly on account of the high debt the company has on its books, which has adversely impacted their financials. For NCC, we saw a big drop come in the month of May after the newly appointed Andhra government rejected some of the orders which were sanctioned by the previous government, which again, NCC is the biggest beneficiary of those accounts, had to see a big selling on account of that. So there the estimates have gone wrong. Indian Bank, again, there are concerns with respect to asset quality, delay in recoveries from the stress sector, as well as the uncertainty from the merger with Allahabad Bank. That is something that has missed the most of the analysts' estimates. For ENIL, it has been the sharp degrowth in their ad revenue growth on account of the economic slowdown, as well as challenges from the ramp up of its non-radio business and the increased adoption of digital content, which has been one of the overhangs for the stock. For Sterlite Tech, it has been consistent issues with respect to promoter pledged holding, the lower margins on account of the weak fiber cable prices. That has beared down on the stock price. It's fallen almost 35% on a year-to-date basis. The next stock on the list is Dhanuka Agritech. It has been impacted adversely on account of the delayed onset of monsoon, as well as the fact that most of the factories in China which are shut down have spiked up their raw material prices, and as a result of which we saw the margins for the company fall to a 5-quarter low. For HCG, which is Healthcare Global, the high debt the company took in order to fund their capex plan, that has hurt their bottom line, and in the first quarter of FY20, their net loss in fact more than doubled over the previous quarter. So their financials have been completely impacted on account of the high debt, and that high debt is a common theme that you will see across most of these names as well. Capacite Infra, it is one of the infra companies which has a higher exposure to real estate, and the persistent slowdown that we've seen in the real estate space, that has not gone down well, in addition to the liquidity crisis that is there in the system. So that has impacted the stock negatively. For Karur Vysya Bank, again, concerns with respect to the asset quality, contraction in their advance book, mainly on account of the stress in the commercial segment, that has negatively impacted the stock price. And lastly, for Ashoka Buildcon, it's the other stock in this list, which by the way has 100% buy rating. So all of the 11 analysts tracking the stock on the Bloomberg terminal, they have 100% buy rating. And look at the stock, it's at 97, and the lowest target price being 120. So again, a 20-25% cut, and that is on account of the weak order inflow from NHAI, as well as delay with respect to the receiving of appointment date with respect to 3 of its HAM projects, and again the high debt the company has on its book to service most of these projects. That has gone down negatively for the stock price.
Very quickly, Yash, tell us about the most bullish and the bearish bets on these stocks and which brokerages they are from.
So we've tried to take a look at which are the brokerages which have the highest as well as the lowest. So the lowest target price were from some of the so it's a diverse universe over here. It starts from Kavi, CIMB, BNK, Aquarius. So a lot of the brokerages out there with mixed target price, and if the kind of fall that we've seen compared to the lowest target price, the stocks are quoting almost 30%, 35% low. Look at the highest target price. Take for example 8G Infra. The stock is currently down almost 30% from its lowest target price, which is 300, but the highest target price from HDFC Securities that stands at almost 462. So there is this huge amount of divergence with respect to the lowest target price as well as the highest target price, and most of these stocks, or at least these top 10 stocks, they have completely been off the mark with respect to analyst estimates and have disappointed the street the most.